Okay, start recording YouTube movie. Akif, thank you for your precious time today. I'm looking forward to talking with you on this weekend.
Thank you, Shota. It's very nice to participate with you in this conversation.
Okay, and I will introduce about Akif. Akif has experience, huge experience investing to start fund. And I talked with him the other day, and I want to learn from him how to make fun. Not to make funds, but his fund style is very unique and very intriguing. So let's start recording YouTube today. Okay, Akif, could you introduce about yourself for a little?
Yeah, so thank you, Shota. So my name is Aakif Ahmad. I live in Chicago, Illinois, and I'm one of the founders of a company called Forestlight Capital. And I work with a second partner who lives in Raleigh, North Carolina, and we've been working together formally for the past 4 years, building Forestlight Capital together, and I can share more details about that with you.
Okay. Thank you. And when you started your fund, the time was while COVID-19 affected.
Yeah, it was a very interesting time, a challenging time, but we officially launched Forestlight Capital April 2020, so 1 month after COVID started.
Oh, I see. I think it's very hard for you to collect money for the first time, to raise money.
So it wasn't. It was. I think what happened was
Okay.
we had been experimenting with this idea for 3 years prior to
Okay.
2020. We had made three independent acquisitions, and
I
we
see.
had been able to raise money, and we'd been able to develop our investment thesis.
I
And
see.
so when we
I see.
launched Forestlight Capital, we had a little bit of a track record, a little bit
Okay.
of success, and then we went out broadly to individuals to begin to develop the idea further. Shota, the
Okay.
main idea for Forestlight is we acquire small
Okay.
family-owned companies around the US.
Yeah.
Companies are from very traditional industries, or what we call Main Street industries,
Okay.
and they are typically companies that are 10 to 50 years old and have a
Okay.
very consistent history of revenue and profits and a good reputation in their local market. And so, but they're run by family members. And
Okay.
typically, when we meet them, Shota, they are interested in retiring, but their
Okay.
children or their grandchildren do not want to take over the family business. So
Yeah.
they either have to sell their business or they have to close their business because they're at the stage of retirement, right?
Yeah. Yeah.
So what we do is create opportunity for them to continue their legacy. We
Yeah.
come in, we assess their business to make sure it fits our requirements, and then we offer them a purchase price that is 3 times their profits. And we agree with them, if they agree, to pay them over 2 to 3 years. And during that 2 to 3 years, they transition the business to our management team and management systems. And
Oh, I
then
see.
we take it over to grow that business, to continue their legacy. That's the key part. And so we take what is typically a healthy business and we
Okay.
grow it, we professionalize it, we bring in professional management. And as it grows, we're able to make either dividend payments to our investors or interest payments to our investors. In each case, they can make anywhere from 12, 14, 15, 16% a year over the time that we own that company. And eventually we will likely sell it in about 5 years. But between now and then, there's a lot of opportunity for regular income to be generated and provided to the investors.
Very interesting. And there are huge market in Japan too. Some elder executive have to move running a company right to younger people. So it's very interesting. And I think your team tried to not only buying, after that buying, you add some value to the very traditional company.
Yeah, yeah, we do. So we have a few different ways in which we try and do that. Number one, my business partner and I have different expertise areas. He's the expert in business operations. I'm an expert in business development and sales. And so we bring different competencies to each acquisition opportunity that we have. For example, when you buy buy a traditional company, and these are typically smaller businesses, they usually have profits of $1 million to $3 million annually. Usually companies like this, they're very good at what they do, but they can do it to a certain size. At that point, the owners or the families don't really want to see it grow further because they're comfortable at the size that they are at. If you want it to grow further, you have to get good at certain things. For example, you have to get good at recruiting employees and talent and managers. You have to get good at making systems of your business. You have to get good at professionalizing business development and sales so that it isn't the owner's responsibility. It is a team of people doing the sales, right? And you have to professionalize the way you manage your financials. In each of these areas, we bring expertise, improving financial management, systematizing business operations, improving the ability to attract new people to work for your company, and professionalizing business development and sales. That's the value add that we bring to take a good company and grow that company.
Okay. But for the first time, how did you find your partner? I think your partner has expertise for operating business.
Yeah. So I met him, I met my partner, his name is Farouk. I met him 7 years ago. We met through a business association of entrepreneurs and professionals. At the time, he was the president of that association, and I became a member, and that's how we met. And then now I'm the president of that same association. So
I see.
and the
Like
funny
a
thing,
business.
the funny thing, Shota, was once we got to know each other, we realized we were neighbors.
Oh,
Like
really?
his family home was literally 2 blocks from my family home. It was so interesting. So
Yeah, interesting. That is me.
I should tell you, Shota, that we've worked together now for 4 years. During that time, I've raised between equity fundraising and debt fundraising just about $14 million. So,
Okay.
and we have some very significant goals over the next 18 to 24 months to continue to raise money, grow our portfolio of acquisitions, and really create opportunity for a wide and diverse network of investors.
I see. Well, thank you for telling me how you found him and if why I understand you entered a same entity organization, but why did you decide start your fund with him?
The reason, so we don't, so our model is not typically a traditional fund. What we do is buy
Okay.
companies one by one, and we bring investors into each acquisition. So it's not a traditional fund model. It's a deal by deal acquisition strategy, and we bring investors in on individual acquisition opportunities. The reason we started together working was because after we met in our business association, we took the time to get to know each other over the course of almost a year. And during that interaction, we realized we have shared values, we have good trust between each other, and we bring different and complementary skill sets from a leadership and a business and a sales perspective. So we could work better together as a team. So that's the reason why. And before we started Forestlight, we actually started two small companies together separately. One in the area of recruiting and one in the area of sales and marketing. And so we got to know each other very well during that adventure. And so that gave us the confidence to then work together to start Forestlight.
Okay. It's very important thing to start some projects with each other, and I understand it's very important thing for us to understand with each other. So you did this process. After that, decide to make your fund with him. I could understand. And
Yes.
Akif, for the first time, you raised around 40 million in debt and equity to start your fund. But mm, before you start your fund, what type of track record did you have?
It's a very good question. We had more of a business operations track record. We did not
Okay.
have a track record in private equity per se. What happened was when I met Farouk 7 years ago, and we were starting to work together on our recruiting business. At the same time, he was introduced to a business in Los Angeles, in California, that was in produce, in fruits, and selling fruits and vegetables to ethnic grocery stores across the southern United States. The owner of that business wanted to exit. It was a small business. It was doing okay, not great. And he was introduced by a mutual friend. And he took it, my partner took an interest in that company and felt like he could run it, even though he had no background in produce. He was an engineer by training. He had just sold his education company. He was interested in doing this, and he asked myself and 4 or 5 other friends of his if we could pool funds. He guaranteed us an annual payment and said, "Help me buy this business. I'll run it. I'll grow it." So that company is called Vegetables. Now it's doing anywhere from, it was doing 20,000 a week in sales back then when he bought it. Now it's doing 175 to 250,000 a week in sales. So it's grown quite nicely. And as that company was developing, a lot of the ideas that informed Forestlight strategy became real. You know, we put a manager in charge of that from one of our other businesses. He did a very nice job growing the business. I helped put together the initial sales team to help get new customers. So a lot of, and then as it grew, we improved our operations. Farouk improved the financial management, and it grew as a business. And that was the basis for the idea of Forestlight.
Oh, I see. I see. It's very interesting. And if you advise to some people who want to make funds, what advice do you do for
Yeah,
them?
I have.
Uh, yeah.
There's a few things. Number one, when we first started Forestlight, we had a third partner who's now retired,
Okay.
and we had someone I had known for 14 years at the time. His name is Riaz Siddiqui. He was the co-founder of a very successful, very large private equity firm
I
called
see.
Denham Capital in
Okay.
Boston. Yeah,
Okay.
that's a $10 billion fund now. And
Okay.
so
Oh, cool. Cool.
yeah, so he gave us a lot of guidance, mentorship.
Okay.
He was one of our very early investors, and he helped us think through the strategy and the structure of developing Forestlight. And so I think, sometimes you get lucky that in your network, You have people who have certain expertise and certain integrity and credibility. And it's very important to have those relationships. When you start something that's new and different and innovative, it's very important to bring the relevant people from your network into your effort as collaborators, right? Because no one person has the expertise, no one person has all the knowledge, no one person has all the resources. But if you build the right initial team
Okay.
and you have honesty and integrity and well thought through partnership agreements, it really will begin things on the right way.
Okay. Thank you for telling me. If you don't have some part expertise, but it's possible if we have some strong expertise, one point, and if we ask some expertise people to do this process or something, we can make team and we can make fund. Is it correct?
Yeah, yeah.
Yeah.
I think investors, one of the first thing investors look at is
Okay.
what is your background and who do you work with?
Okay.
Because when you start something new, the only thing you have is your history and your experience and your success, but not just your own. Who else is working with you? If you build
Okay.
the right initial team of partners and eventually good staff people, this
Okay.
is where investors get their initial confidence.
Okay. Thank you.
The
And
other thing,
I,
the other thing, Shota, I'll
okay.
tell you one more thing.
Okay.
When we first started,
Okay.
what Farouk and myself and Riaz and others would talk about is that the investor relationship is a sacred responsibility. It's a sacred responsibility. What that means is someone else has given you money,
Yeah. Okay.
their money, their hard-earned money,
Yeah.
in with the intention of improving their wealth and quality of life. And so you have to honor that relationship in the utmost way in how you deploy that money, how you grow those operations, and how you return not just the investment improvements, not just the
Okay.
return, but the original principle as well. You have to protect that principle. So we take it as a sacred obligation that we have to do well. And we take the burden of responsibility of ensuring that the monies are returned eventually once the investment is complete.
Okay. I understand. So I think when you collect money, it was very hard. You told me. So why could you collect money from LP investors? Please tell us why you could.
Yeah. So there's a few things that I think gave investors confidence.
Okay.
Number one, we did not follow the traditional private equity model of 2 and 20.
Oh, I see.
Instead, the general partners of Forestlight simply have their own shares in each acquisition,
Okay.
and um, therefore, and also uh, they get paid at the same time investors do. So nobody is ahead of each other. In fact, we pay investors first before we pay ourselves. And so our incentives are very strongly aligned with LPs. For GPs to make money, the
Okay.
businesses have to grow profitably, and that's how LPs make money. We don't make any money from management fees or things of that nature. So that was a very important innovation that I think gave investors initially a confidence in us. Number two, um, I think we have a very good investment thesis. We do not buy anything complicated. We don't buy angel, we don't do venture, we don't do turnarounds, we don't do distressed. All we do is buy healthy running businesses that already have cash flow and have cash flow for many, many years. And all we're trying to do is improve upon what already is there, right?
Yeah.
So as a result, when an investor comes into any one of our deals, they start receiving returns immediately, every month or every quarter.
Yeah. 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 Yeah.
And so
Not. Yeah.
that's a
It's.
very strong position. And so the investors who joined us early were benefiting from that. And so very quickly that track record became very credible. And so
Yeah.
therefore other investors came on too.
Yeah. Yeah. It's very different type of fund. If we invest venture capital funds, we have to wait for a long time to get our interest or something. But you buy good business and you improve this business as soon as possible. So investor gets
And
interest, yeah, as soon as possible.
yeah, and Shota, we buy companies that are very um, everyday businesses, like
Yeah.
in nursing and healthcare services, in construction, in
Okay.
transportation of fruits and vegetables and other types of freight,
Okay.
in building services, in medical offices, in distribution of medical and dental supplies. It's very normal, everyday type companies that we buy, right? So we're not buying anything unique. We don't buy anything that maybe, one day it's popular and the next day it's not popular. We don't do that. We buy very traditional, standard, everyday businesses.
I see. I see. But Akif, I want to ask you a question. When you decide what company your team buy or not, um, how many companies do you search?
Yeah,
And after that, you buy one company. How
yeah,
many companies do you search?
yeah. It's a very good question.
Yeah.
So I have a full-time team that we have trained to
Okay.
only do research on identifying new acquisition opportunities. I think they probably look at 20 to 30 companies a week.
Okay.
They
Oh, I
prob-
see.
they probably look at they talk to potentially maybe 5 to 10 owners a week,
Okay.
and their job is to get to anywhere from 1 to 4 signed letters of intent every month. And then from that, after due diligence, we take about 90 days to 120 days to really evaluate the business. Out of every 4 businesses we evaluate, maybe one is a viable acquisition, right?
Oh, I
So,
see.
so
I understand.
that's how the funnel works. And I have to tell you, in America, there are over 40,000 small businesses that are currently up for sale. Some large number like that. I
Okay.
recently heard that in a presentation that I was watching, that there's just so many families who are at the stage of retirement
I
and are
see.
now wanting to sell their businesses. There's a lot of opportunity in this
Okay.
market.
Yeah, in Japan, there are many small companies. Japanese company, most of the Japanese company are not separated, executing business and own stock. People who own stock run companies.
Right.
And this is Japanese company situation. And Japanese executive people's age is over 60 years average
Oh,
60
okay.
years.
Okay.
Yes, yes. There are huge markets, and I invest my money to one M&A company, and this M&A company collects some information from people own business. But in Japan, it's a very difficult collect information, fundamental information or something. So I want to ask you, you told me you collect 20 or 30 companies per week, but could you get fundamental information or KPI information when you attack them?
Yes. So again, they're researching 20, 30 companies a week.
Okay,
And first they do online research.
okay,
Then based, if the company looks interesting, they'll reach out to either the owner or the business representative for that company. And they will obtain financial data and KPI data. And then they will evaluate, are the financials strong enough for us to be interested? And if the answer is yes, then they'll get more information from them.
I see.
Uh,
What percentage company do provide their information?
oh, because the companies that we talk to are already up for sale, the majority of them are already looking for a buyer.
I see.
Almost all of them do.
Okay,
That's
I
not
got you.
difficult. Yeah, that's not difficult.
Got you. It's very intriguing. Thank you for telling me. Okay, I understand. And mm,
The
Akif?
only the
Okay.
only yeah, the only question is how accurate are the financials? So you have to really do audits. You have to really look at the details and make sure that the information is accurate. But that's part of the exercise that we do.
Okay. And Akif, when you start your fund, I think you contact many investors, but how many investors did you contact?
We contact a lot of people.
Okay.
We now have a database of maybe 1,000 people that we know.
Okay.
And initially, I think we're close to 100 people who've invested with us now, somewhere between 90 and 100. So I
Okay.
think you develop these relationships over time.
Okay.
And when people are comfortable and they see an opportunity that they like and they see a return that excites them, they may choose to come in. We don't have large barriers. We invite people to participate at $25,000, $50,000, $100,000. So for those who invest anyways, it's a relatively familiar amount of money to deploy.
Yeah.
And then if they choose to deploy more later, that is entirely their choice. We do not enforce any kind of strong commitment. They do not have to put money aside like
Yes.
traditional private equity. What we do is say, here's a deal, or here's an investment opportunity. We present it to you. You tell us if you want to come in, and you come in.
I see. And it's a good thing. If we try to invest your fund, we can start very small amount of size. $25,000. It's I think it's minimal ticket size. It's very good thing, and you open opportunity to invest for investors.
Yes.
So I think you could collect money from about 100 investors. Yeah.
Yeah, because you see, Shata, our interest is not, see, we want to develop relationships and trust. But if you
Okay.
come in at 25,000 and let's say the instrument is a 15% return instrument
Cool.
annually, that means every month you'll get a check deposit for $312.50. And as those deposits come every month, that means you're building trust with us, you are building a regular track record with us, and you have communication with us.
Okay.
And those three things build confidence, right?
Yeah.
So then you might decide to invest again, or a third time, or a fourth time. That's how we've seen our network grow and our funding grow, is that you start small and you build over time based on actual results.
Okay, thank you. And I think I estimate if you provide uh, 15% return, uh, your team have to find and improve the business, good business, probably over profit rate is over 30% or something. So you have to buy good business, and the good business is sold. It is because the owner is elder, and I think I don't know heritage ratio. They if they die. But there are trouble in Japan too. The owner have to pay a lot of tax when they die. So is it same situation?
Oh, in America? Yeah,
Okay,
I'm not as familiar with the estate tax laws
okay,
as you are in Japan, but
yeah,
it is true that there is quite a bit of tax on businesses. And when there's an estate transfer, it's quite complicated, I think. Yeah, you're right.
yeah, very complicated. Yeah, okay.
So good. It was a very good discussion, Shota. Thank you very much for engaging in this conversation with me.
Yeah, I'm very happy to talk about this topic. And last question, Akif, do you have something that you want to talk to audience? I could ask you a good question to know about your fund, but do you want to do you have something you want to tell to audience?
No, look, I think it's very nice to have this opportunity to communicate with you. Thank you for taking the time to learn about Forestlight and listen to Shota's interview. He was very kind to invite me to participate. We only met a few days ago, actually, so
Yeah.
he was very generous in making this opportunity available. I think that, we have a good strategy. We have a lot of acquisition opportunity in front of us. Our goal is to continue to make acquisitions every year, typically 4 to 6 companies a year. And we are focused on sectors of the economy that are performing well and do well in recession and do well in other difficult times. So I do look forward to having further conversation with you about the Foresight opportunity. And if you have interest in us, please contact Shota and we'll be happy to engage in further discussion.
Yes, I will share some information about Akif LinkedIn profile or their company site information. So please contact me or Akif. If you cannot speak English, I will help you. So let's try to invest. Thank you, Akif. When I go to Chicago, I will contact you, and
Yes, please.
I wanna make and eat sushi with you. Yeah.
Thank you, Shota. And
Okay.
if I come to San Francisco, I'll certainly reach out to you as well.
Definitely. Please contact me.
Okay, Shota.